What's up, guys? This is the first episode that I'm uploading on YouTube, and it's just gonna be about my trade recap for the day. I made $620, but it was like 3.2 something R, just for the amount of risking on a 50K. And I'll be teaching top-down analysis and daily bias because that's the best lesson I can give for how today went. And I will continue making educational content, kind of. I want to teach these concepts and simplify it and just document my trading on here and then get ideas what else I'll post. So, yeah, by the way, just the market move today on that like the fucking 200 point move down. Anyways, I'm gonna start on this daily. Um, right here, very obvious right now. We have this daily buy side liquidity, and stick with me for the top-down analysis, and it'll go into daily bias, rather than saying, "Oh, you only need this for daily bias. Oh, you only need this." No, daily bias is you understanding liquidity, understanding order flow, and then using both your discretion and you'll get better at it if you've been trading in the markets. But when you're new at it, just use strictly these principles, and then while you're in it and for longer, you'll understand more. We have an unmitigated daily. SIBI is a bearish gap, fair value gap. Um, and then what else do we have in the daily? We have an all-time high here, and I'm not gonna really name that, but that's just good to always have. This all-time high, and what you see here is this is what I shown. Like this is what I did for myself when I did a weekly review, like trying like every Saturday or Sunday, try to understand where price might go next week. And last week we hit this like fucking weekly sell side liquidity target, and we've been delivering off of that. So we're delivering off of this really high time frame liquidity. We've been inversing these bearish gaps. We've been creating bullish gaps. We've been respecting bullish gaps on the daily, and we have a daily. This is actually my drawn liquidity on the daily. Um, yeah, so that's on the daily. We're bullish, we're going up, but that doesn't say we might not retrace down today. True, that's the bullish, but we're trading intraday. So that's an overall narrative. Now on the lower time frame, or 4 hours, still high time frame. The next standout uh swing high point on the left is this buy side liquidity, and oh, that's my bad. And what you can see on the right, we have, let's forget about this because this already happened. We have this sell side liquidity. We have this sell side liquidity right here. And we have this sell side liquidity right here. I'll mark these out. Don't need to mark more than that. This was already extra. But again, on the 4 hour, you are now noticing that this gets inversed. This 4 hour gets respected. These got respected. This one got, like, we're seeing the same type of behavior on the 4 hour. It's fractal. What you want to see is that price is agreeing on these time frames towards where we want to go. And we've been very bullish. We've been retracing, and every time we're retracing, we're respecting these PDA rates. And we hit liquidity, and we're continuing off of it. We're not reversing off of it. Now we go 1 hour. Now 1 hour is not always too different. I'll mark out these on the lower time frame, but you'll see that there are these fair value gaps right here. 1 hour busy fair value gaps. I know it's three gaps. I I don't feel like separating them all and connect. I'll just connect them as one, and because it's more of the area, it's a range, and you see that price actually is accepting here, and we're going bullish again. If anyone traded this morning price action, um, and yeah, any fair value gaps we created, we inversed, we never respected them, and same behavior. So what I would do is I'll pause right here. I'd go from the daily to the 4 hour to the 1 hour, and I'd mark out levels in liquidity or key levels that I would want price to go to. I think price may want to go to. Not trying to predict which one it'll go to yet, but where it may go to on both the buy side and the sell side. And then I'd also look how price is reacting to PDA rates. I use fair value gaps, but I'm sure if you're like, I think fair value gaps is the best way to do it when you have a bullish gap and a bearish gap. What does that mean? It's an inefficiency and it's an imbalance on the side that's, like, let's say you're bullish and you have a bullish gap. It's an imbalance, a displacement. We displaced higher and we have a sell side inefficiency and market is moving higher. Um, there's more, not buying pressure, selling pressure, but market is delivering off of sell side liquidity and reaching for buy side liquidity. And it is creating internal liquidity, but it doesn't have to go back to them. It can touch them. Like you're if they're unmitigated and you're looking bullish, then you want to see unmitigated bullish gaps and not an unmitigated bearish gap on like some retracement. You don't know. Um, I don't know if the mic picked up on that, but people honking outside. Um, and then you also want price to even tap back into them, respecting them and trading out of them, not inversing them, and um, definitely not displacing back through them. And and when your time frames agree from the daily 4 hour and 1 hour, then you are getting that type of bias daily. You're getting the order flow. You understand where price is pushing to. It's trading to this high time frame liquidity target on the buy side, which is where the market makers want to go in order to decide like where to move next, whether it'll be off that point or farther. That's where you're trying to align with yourself with them, and that's the idea behind daily bias. Is you're trying to think like these market makers, the people, the places, the people that are, well, the people, the algorithm, the machines that are hunting liquidity, not just where price should be at. So on the 15-minute, I start trading at. I would only trade from London. I don't know unless you want to trade Asia. I would trade London and I would trade New York. And so if London were to start right here, I would mark out the key levels. I actually didn't like the 15 today, but 15 works fine. Um, I would mark out this key level right here, and I would mark out this level right here. Normally, I'd label them as Asia high and low, but this was right after Asia. That was right before Asia, which I do from 8 to 12. But it's all the same thing. You're looking for the levels. The names doesn't really matter. There was also, if there's like 15-minute fair value gaps like this, I would look for them. This is actually a BPR, 15-minute balanced price range, which is when you see this bearish fair value gap right here, and then it gets inversed and is another fair value gap. So you displaced the opposing displacement and you have an opposing inefficiency in the same level, showing a more balanced price range where price is kind of canceling each other out, whatever, but it is still a level of inefficiency and displacement which price goes back to because it acts as a stronger draw that goes to fill both the inefficiencies. And that way, it's a very strong entry, very strong on the lower time frame for entries, very strong draw, especially when you have like really high time frame balanced price ranges. And besides that, for the 5 minute, we marked these levels. London opened and actually marked out this level. I'm recapping my trades too. London had this sell side level, which I'm looking at in hindsight was pretty bad for me to mark, but it was fine. And then it created this relative equal high. Important to note, relative equal high. Very strong drawn liquidity, nearly equal high when the high to the right side is lower. But when you target them, I like beware that sometimes like today price will take the lower one and not the higher one. I do REH for relative equal high, and then price went down. And when your bias is bullish, my bias is bullish, my overall daily target or like high time frame target is this level. Obviously, I have this level marked, and I'm not going to target up there, but I want price overall to move up there. How does price overall move up there? By making bigger moves up than the moves down. Or from a big move down today, it will create a bigger move up or eventually move up. You need to be confident in what you're doing. You see this? Price went right into this 1 hour zone, right into the center of it. Now it might still go down to this level, but we're bullish. We might not. When you're bullish, you leave some of these sell side liquidity levels, and it was still hitting all through this low and this low and these lows. Like, didn't react off anything. It was just a manipulation move, like from news, but still. Um, what I was saying is you're waiting for price to go down. And if you're scalping or if you see a good setup, you can even trade the retracement or trade down. But when price goes down, then you start looking because right here, you see this V shape. And I will make a video about my entry model. I'll make a video about all that. But right here, price hits liquidity, goes down into the fair value gap, it reverses back up and creates a strong, it's actually a BPR if you know, in between the wicks, but I'll just label the bigger one as 5 minute IFEG. I like trading on 5 minute. And what I did for this trade was, for me, when I enter, I measure out the leg right here of the leg that formed the fair value gap that got inversed. The leg that I'm trading from. Why? Because if I were to enter here and price were to reverse like it did right here, the first internal, the range is from up here to down here, the first internal swing high, then if I were to take profit or break even or anything, I'm at less than 1R. However, when I enter off of the equilibrium, which I know in this trade it didn't go well, but I'll show in the next trade, I would put it probably just here for the sake of the CE of it or the middle of the BPR, because I put my stop at the swing low. Why? Why do you put your stop at the swing low? People say this, and then I used to think, just like a lot of people think, well, if the liquidity is above the lows and behind and highs, why would I put that? Am I just the liquidity? You are. First of all, the liquidity rests in between in this range, right? In between these highs in the middle, on the gaps, everywhere. But there's a difference. If this was a real liquidity sweep, if it's a valid one, this will be a protected low. Price does repurge sometimes. It depends. It's a deeper understanding of liquidity. But like this low right here, which I'll show in the next trade, which had a more proper liquidity sweep, a stronger one, is a protected low. Now, price did come back to that level, but after the reaction to the level. So I put it under the swing low because that's what I'm treating as a liquidity sweep. But look how uncomfortable this is. If I want to target here, first of all, the RR is fine. It's not great for the amount of move, but my overall target could be here in the event that price does go up. I have to get through here. Now, I'm assuming price is going to trade up into this protected high because price sweep liquidity and expanded and respected the range before it even entered. Now, that's one thing to note. I shouldn't have taken this. I don't want price to try to exit and enter the range because then when it's going back in, it's going back to search for the other side, and it's a whole thing. Internal liquidity didn't end up taking it external, and then I got out of break even over here, and that's good and all, but that was a bad trade for me. Um, however, this is the trade of the day. Again, bullish. My overall bias is bullish. Right here, this is London relative equal lows. So it's a session low and they're relatively equal. Buy side liquidity, or sell side liquidity. Price wicked it, created an imbalance going towards it, inverse the imbalance instantly, creating a 5 minute inverse fair value gap. Now measuring, I could have entered right on this candle close. However, I'll be honest, I just missed it. Like I checked I checked like 2 minutes later when the other candle was forming, and I got lucky. Honestly, if prices traded up here, it could have not reversed. Kind of got lucky, but if I just wanted good RR anyways, I wouldn't have even cared. I would have tried putting my entry here. I think I entered around 2250 because of spread, but I would have entered like at the consequent encroachment of the inverse. Put the put a 1 wick below. Price likes to make equal and relative equal highs and lows. Put your take profit. I don't see people saying this tip, but I do it. Put your take profit a tick or two below and a tick or two below the stop loss, a tick or two below the take profit level, or vice versa on shorts higher than the levels. Look what happened here. I mean, if you targeted here, you'd be fine. I targeted here. My stop loss was here. And I'll be honest, I think my stop loss was right here at the low. No, it's definitely here. I think I'm getting the level wrong. I'll have to check. I think it was something like this. Um, but I don't really recall. I'm trying to like do it off memory now. But and I'll show the trade. But Yeah, I just don't recall. And maybe I did put it right on it. I I remembered I entered on my phone. But anyways, in general, good lesson, rule of thumb, don't do that. Why? Because look right here. I entered and I got stopped and got my take profit right on the tick, just right under this level. And that's just to be safe. Now, there's no actual rule. Price, I don't know. I would think price will go up a wick above here before reversing. However, one, the markets are manipulated. And two, you just don't want to lose like that. You really don't. And what is a tick? A tick is like 50 cents on a micro or $5 on a mini. You will be fine. Anyways, this is my trade. Now I had a take profit right here at the first swing high, and this is also my break even point. I'll put it right here. So TP1 and break even. And when price went up here, see how it wicks back here. You don't want to go break even too fast. It wicked right back down here, right back down to the like this level of the BPR that is just continuously holding, and price is drawn to. And then it went up. I was entered 7 micros. I took 3 out here, and then 4 got taken here. And obviously I trailed my stop up to here, but not much more because I'm not trying to do these like 10, 20, $50 little intervals in case price like retraces. I trust in my TP. Take profits where you think the price will actually go to, and then let it go. Because you will lose. I lose. Everyone loses. The best traders lose. But their wins are greater than their losses, or they win more often than their losses. But they let their wins play out so they can actually make more money off before their losses. One of the hardest psychology lessons, and I have to make a video on this, is learning how to win. Not just learning how to lose, learning how to win. Anyways, and then I hits up here, and that's how I manage my trade. And yeah, price today morning went up, and I guess just wanted to retrace. I don't know, pretty ugly price action. But even though price went down here, overall idea, price took a big dip down here and a big dip down here. But overall, with all these big hits in the market, look at where we have been going right here, big dip down here. But overall, 2 weeks ago, 2 weeks ago now? Yeah, 2 weeks ago, or a bit more this 2 weeks ago over here. But like just nearly 2 weeks ago, we were down here, and now we went up nearly 2,000 points. And that's the thing. There were way more longs than shorts. Ended up higher than lower. We are bullish right now. And look, we're bullish right now. We're going up, and yeah, we might reverse. You have to understand price retraces on the high time frame. But that's why it's a bias, user discretion. And if they're on the 1 minute, I know there was a good trade here. But throughout the day, if you're bullish, if you trade Asia or even later in the market, you go up here. You went up here. You went up here. You went up here. That's how I determine it. And you keep looking. Like on the 1 hour, you see this big bearish thing. Now it didn't inverse any bearish for value gaps, and you have this gap. Price inverses this gap. I think we'll take this liquidity and just go up. Like, if we respect this gap, then maybe we'll go down to the relative equals lows. And that's what I look out for. If I don't know and I have something that might question it or test it, I'll wait. Now, I'm not trading today, but for tomorrow, and for tomorrow it's probably going to be irrelevant, but if you trade PM, this might be important data to know how price will react to this 1 hour CB fair value gap. You need to know this. This is a bearish gap. However, you can inverse it, disrespect it, close above, like close here or even above it, and now you're bullish. Or you go down and you might target these relative equal lows that formed. And if this was a data candle, then this is a data wick. I need to check. I don't even know if this is a data candle. But yeah, that wraps my first episode, my first ever episode uploading. That's the win I took. I don't know if I'll put the picture before, maybe I'll put the picture now, and of like my trade. And yeah, that's how I do my top-down analysis. Really simple: liquidity and fair value gaps to determine order flow and drawn liquidity. And you just need to know these topics more in depth. It doesn't actually matter to have 100 things on your screen. It makes it more complicated. And yeah, that's pretty much it. And I'll just see you guys when I upload more in the next videos. Whatever happens, hopefully there'll be good trade recaps and hopefully there'll be educational videos y'all like. But yeah, thank you for watching if you made it this far in the video.